Welcome, everybody. Glad to be back with you after I left you in charge of the precious metals markets, and look at all the nonsense you made. But anyway, I forgive you. I'm here to fix it. They call me Mr. Fix-It. That's right. The Silver Messiah is back. He's back, and he's here to tell you the discount window is alive and kicking. Alive and kicking indeed. Thank you for the sound check. And also, let's go screen share. Let's get it right from the very. Let's leave it on, even if it's tunneling. Let's go head right over. Let's head right over. I'm going to start on gold. Oops, it's you kind of want to say silver. Just look at that, baby. Isn't it a beauty? I feel like we should be adding a little more. It's an absolute gimme what's coming. I mean, it's winning is easy at the moment. And it's just one of those rare times, you know. It's super is rare. So let's put this order on. Why don't we do it right with you? 85.39, falling wedge, 85 point, and I'll leave it at 19. Leave a few shekels on there. And let's put another 10 on. Let's go. Okay. While that order is being lodged and the broker is panicking, yours truly is going to rinse them out and squeeze their nuts again. I hope they're laying it off okay. They appear to be. Mind the slippage, even with that move and at an all-time high, it's being pushed up. Let's go to gold, though. Let's start with gold. I wanted to show you gold. Let's start with gold. We really use our brokers that we affiliate with, by the way, all of them in the links below the show notes. I don't consider it a show. I don't think it's notes. It's links under my YouTube channel. We actually use the ones that we affiliate with. They must be reputable. And I can tell you, for example, Tickmill have been first rate. Scandinavian Capital Markets have been absolutely first rate. And I can tell you SimpleFX have actually been untouchable so far. But who knows, in a world of counterparty risk, who knows truly what is forever? Nothing might be forever. See over here, even less of a dip. This did go marginally lower, but where do we start? We start on the monthly. Let's start on the monthly. In fact, I'm going to leave my broker with all these annotations, and I'm going to take a Oanda chart, which is a little cleaner, and then we don't have to show you how many shekels we're making because it's almost obscene. Let's show you Oanda. Okay, this is something I did. So a couple of things happened last week. I told the whole community I was getting out. I started warning. I was feeling a little bit skittish around Wednesday. Thursday night, I did an ad hoc update that's only for our premium community, trading metamorphosis members. And I said, I've closed absolutely everything that is retail, long, precious metals. The only trade I was holding on was short Bitcoin and Ethereum across a number of different platforms. And that I was quite happy to have on a set and forget, take profits and stops are in. And I went away relaxed because most of my big size trading, which had been on the precious metals, was now closed. Banking at all-time highs, despite withdrawals, accounts at all-time highs. I suggest withdrawing because that's when you find out how troublesome your bank is. And they suddenly go, oh, you got some money all of a sudden. And they want to ask 20 questions. And you're going to have 20 questions. That's why I like to use wires as well. Also, link below. Lowest hassle of them all, but they still ask questions, especially when you drop big chunks of change in there. But let's get back to the gold. What happened? Well, on this particular one, Sunday night, let's also disclose the broker ticket and pull it in. This is called Candlestick Analysis 101. It's really simple. And if you want to read about this, you can have a read of Neeson's book. He's done a number of books. I read them all. I bought them all. I read them all. Big time frame view, and I am often an exponent of that. What really happened? You had a rejection, about a 50% rejection of an unbelievable month. No one would be crying if we just opened here and closed here for January month at 4,924. Everyone would be going 5K in February, 5K comes in February. But in actual fact, we spat up to 5.6, almost 5.650, and we gave half of it back. And then when we opened here, we traded all the way down and then became rebounding all the way back. Now, last night, Sunday night, when I was updating the community, again, saying I am buying the lows on a hammer trade. At the time, it was a red candle Okay, at that time, Oanda was a red candle and there was a doji, something like that, and it was red. And we entered here, stopped there, and went to bed for the Asian session. Asian session, pretty good normally for precious metals, can tell you. And it floated up very, very nicely, taking us deep into profit across the board on all platforms that we're trading on. I trade on multiple platforms because I'm essentially doing the same idea, but I'm diversifying my risk. I'm comparing the service levels, the deposit, the withdrawal experience, etc., etc. It's all very interesting, and you don't fully know a broker until you've deposited, traded for a while, and withdrawn at least once or twice, and differing amounts. And some of it isn't even their fault. So generally, my brokers have been enablers. They've not been disablers. Many bad retail traders blame brokers. What they mean is they're unhappy. And unhappy traders are traders that consistently lose money. If you're happy, and it's one of the tools that makes you happy, I actually have good relationships with them, and I'm glad they exist. They have a liquidity provider that's probably one of the satanic banks. And, you know, they like to change the rules every now and then, but if you're successful enough, the margin calls, I've still been able to trade great size despite all the increases. If you're growing your account in one of the biggest macro bull moves in history, yes, friends, you have a globally synchronized fiat and debt-based collapse. I'm going to keep saying that until you wake up at night and you realize it. You have a globally synchronized, particularly of the West, synchronized fiat debt, same thing, money today or money later with a rental agreement, based collapse. Buying power is 100% slipping very violently to the downside. Some of you will be asking, so what happened? What happened on when you left? I'll come to that in a minute, I'm sure. What's essentially going on is that, particularly in America, as the hegemon, and as I've said before, America sadly is the largest, dirtiest shirt. It's in the Triffin's dilemma definition. Okay, Japan isn't. People aren't demanding yen. They don't have a license to send out tons of paper for yen. Yes, they overborrowed locally because they did a property-based boom. They were forced to by the Pharisees of tertiary extraction when they were having too good of a savings problem and selling too much stuff to people and creating too large a trade surplus. That problem needed fixing. So they nobbled the banking system into a zombie bank apocalypse, first by creating a pump and dump scheme. Okay, so that's how Japan got that. And that was because they were under the control of the larger ZIO, US, Israel hegemony. And that's where we end up. But Japan, with their unfunded liabilities, are at about 353%. Versus 250 without their unfunded liabilities, debt to GDP, and America is around 600%. So forget that 130% they're talking to you about. They're going to renege, or they don't intend on seeing through to the fullest extent on a like-for-like basis on welfare, Medicare, Medicaid, and all the other things that have not got money set aside. Back to this, nothing's changed. You're in a fiat and debt-based collapse. You went too far too fast, and they put a bit of the brakes on. Absolutely typical for these kind of events. You had a huge event, dollar index. Do you remember the YouTube? Huge event. We called it fell through the channel. There are other people who we've appeared with that told you that the dollar was going to moon off that bottom and run to the other end. No, when you are the largest exporter of paper, treasuries and dollars, and treasuries specified in dollars, and no one is buying your stuff to the same scale as you are reliant on buying others, those assets that you're sending in the opposite direction, treasuries and dollars, do not carry much desire or demand. And what's happening is you're going to face higher interest rates, as we've continued to assert. Australians in the housing market got increased rates on their mortgages, called here on this channel about 2.5 years ago. The structure that we saw was going to break to the upside. It's now broken to the upside, and it's at the first and interim. Yes, and you're going to see it across the board on everything else. As we called on the Japanese debt, which with their inflation now being higher than the US and their rates now fastly moving higher than the US, the dollar actually slipped quite badly to the yen during the breakout to the downside, now recovering. Back still to this macro time frame, a partial, this is not a shooting star, friends. This is a 50% counterattack that followed through to here and is now facing a fresh counterattack back up with this hammer. That's where we are with that diagram. I'm going to show it to you on a bi-weekly basis as well. So let's do that. We're going to drop from a monthly to 2 weeks. So there's your fortnight. That gets you almost the shooting star. It's still a bit bigger a body, but that's almost a shooting star. And what do you get? An immediate hammer. You have your pullback and you're certainly bouncing back up. I also want to highlight that was a shooting star. Too many. That was a shooting star. Too many. What happened? You had the one dip candle, hammer, and you went back up. You went back up. That's a shooting star doji. What happened? You went back up. That's a shooting star. You set up a continuation pattern of extreme low volatility that ended up leading to another major upside move. That too was a shooting star, potentially at that point, but it turned out not to be, as of course the candle continued to do that. Later you did of course have a sell-off. That is a potential shooting star, and that one did have a correction, but this led to a lower volatility period which set up further continuation. When you get a hammer, it almost neutralizes the shooting star aspect. So we're now on a fortnightly chart. This neutralizes, and the current momentum is with the counterattack going back up. After the attack to the bull move, you're now in the counterattack going back up. What do we say? Continuation is your friend in this trading environment. This is one of the greatest macro bull trends you're going to face. On balance of probabilities, you'll be all right 7 times out of 10, and the upside asymmetry reward to a tightly managed stop is always going to make those trades incredibly worth your while. Imagine you had a stop there and a target somewhere up there. You can see that the risk, this amount versus that amount, is quite a lot less. So we're just showing you in basic scribbles. This is what we specialize in. This is what we specialize in. Fast moving breakouts based off low volatility to higher volatility expansions. This is what we specialize in. To find out more, click the link below and book a call. It's in the notes. Book that call. If you're unsure and it's the first time you're chatting or watching one of ours, grab the free mini series. Get a few videos explaining you 1 or 2 of the basic principles, just to fly past. Quick and easy, 1 video a day for, I think it's 6 days. So that's a rejection, and this is a rejection of the downside, rejection of the high side, too much too soon, and then suddenly coming back up with that hammer. It's the perfect counter response to an otherwise bearish candle. That is 2 weeks. We've done monthly. We're doing King anti-fiat, which is gold. King anti-fiat is gold. Now we'll drop you one more time, and it only gets more bullish for me. Now the shooting star is actually a red body one. It wasn't at the absolute lowest point, but it was pretty much on the lower third. A very good textbook shooting star, kind of like that, and on a much smaller degree that. And you could even argue that. What you'll notice about all these examples, and you could even argue that, is that despite them, you're a whole bunch higher today. So who counted how many Bitcoin maximalists started mentioning rotation trade? Did that happen? I haven't been around. I haven't been watching. How many of them said, rah, ha, ha, this is, look how volatile gold is, unlike, and silver, unlike us Bitcoiners. Sadly, they may be keeping a little quiet now at the moment, because of course they're in a bear flag collapsing, and MicroStrategy is also rolling over rather nasty, and your future FTX situation might well be a strategy one for this particular bull market. This is absolutely a negated candle with this hammer. You had your reversal, and now your reversal is being reversed. Simple candlestick analysis. You are not long enough. You would have been long earlier. You would have been long with our community sooner, but it's still not too late. Non-advisory. Hey, I'm a trader talking about how I choose to trade. and some of the things that I utilize to do that trading. And that's how I play it. That's how I play it. That was your discount window. You can have a stop, and you could have bought anywhere on these body points, and now we are going to move up. My suspicion is the next candle, guess, is a green one. You know what? It's a pretty good guess. I'll be right probably 7 times out of 10, particularly after a very large red one, which actually is a rarity in what is a bull market trend. We have highly reliable, my best pattern, the HVF method, hunt volatility funnel setup on silver with a target at 333. And inside of that, we have single digit gold silver ratio. There is so much more to come. And where did this strength come from? Well, we have a divergence in the price. Let's talk fundamentals. You have a divergence in the price between China and between the casino, not so big on delivery market, versus the delivery market in Shanghai. So that tells you one thing. You have a huge amount of JP Morgan covering at $78 near the low. That tells you a whole bunch of stuff as well. So all of these things are happening fundamentally. Do not confuse your fundamental opinions, though, because you might have been fed bad information, with your technicals. The technicals look great. The technicals look great. The hammer is in. This is a buy. The next suspicion of upside is a green candle, or next candle to be, is my guess, an upside green candle for the following week. And even inside this week, this may cease to be a hammer and may start to have a longer body of green. That's right. You're only Tuesday. It's only early. This is king anti-fiat. In actual fact, it shouldn't be king anti anything, because the original thing was money. It's money, and all the others are derivative proxies with fraudulent intermediaries currency, whether it's Bitcoin, whether it's dollar, whether it's euro, whether it's pound. Paper derivative proxies for real money. It was so much real money that we used to back it with the real money and the gold, until temporarily in 1971, Nixon removed the window of conversion. And since then, you've been in a free float system where it's lepers in a leper colony, where you compare who's the ugliest of them all, who has the biggest military of them all, until the person that did has sent so much bad money overseas, nobody wants it anymore, because they don't really want to be the ugliest, filthiest, scabbiest leper in the leper colony anymore. So they stop taking your filthy stuff, and they say, no, 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 we'll take something healthy. We don't want to be the first leper to die. We'll try survive, we'll try heal. And that's where the dollar finds itself right now. So your big time frame analysis from monthly to fortnightly to weekly, as delivered by me on this, just telling you right here in my take, is a major discount buying window for gold, silver, and platinum. End of story. I'm not half-baked. My message is clear. For me, that's the message. End of story. Whale in on your investment, drain some from your highly stuffed accounts if you're in our community. We will be minting the most millionaires in any community group, and I'm looking forward to delivering that to my members if they choose to, and if they take the same decisions that don't entirely diverge from mine, and if mine turn out to be correct. I could always be wrong, but it is my expectation, and we're already showing quite good aptitude at delivering on that for a number of people, going by what they are saying in the meantime for themselves. So money, wealth, you name it, it's coming. Okay, let's talk on lower time frames now. We're going to jump right down from daily to weekly. And I'm going to share this again. Now, on this particular broker, they've cut the time a little bit in an interesting space. It's not quite a hammer that, but in actual fact, depending on who you get, let's try TVC. Let's go back to our friend Tickers. Yeah, depending on this one, and you'll note that I'm using weighted candles, and some of you will go, the volume, Francis, the volume, you always tell us volume matters. Yes, it does indeed matter. That was a big volume day, but this was equally big. The fatness of that candle is actually slightly fatter than that one. And this was already thinning. And those are complete days. Now look at the hammer's width down here on this broker, and it depends where you've cut it. You can see our early entries here, over here, the blue lines all along, all the way through, and we've added a few literally there. We're having a tiny bit of a pullback. So we're looking at this on a daily time frame. So we've already shown you monthly, fortnightly, weekly. We're now going daily. We're looking at the same data broadly, different brokers cutting it at different times. It's the same numbers. The high should be around 5,600 over here. And the low for gold should be around 4,000. Let's get you an exact number. Tickmill says 4,402 was the low. And the high was 5,597 and 5,596. So almost 5,600 and 4,4, the low. So 5,600 and 4,4. Quite a move, I'll say that much. So that's $1,200. $1,200. Let's also get a percentage on that because silver was even more extreme. But let's just catch up and do the numbers for you to the low. 21.35%. For gold to do that level of move in the space of 3-4 days is unheralded and points to an organized attack because the dollar didn't suddenly become more investable. The banks aren't suddenly more better fortified by balance sheet and safer and in a better way. Everything continues to get worse and you are in a debt fiat-based collapse. Okay, so this was an orchestrated move by the forces that needed to do whatever they needed to do, and they've actually given you a gift. Remember, you can get angry or you can laugh and say that's a great gift. If you got out with us, this has been a great gift. I'm going to make the same territory again and make profit on the same territory again, having already done so previously. And when it gets up to where it was, I'll have profited twice from this area here up to here. How nice is that? They're giving you a do-over. They're literally giving you a do-over. And you'll still not end up at a higher up number. If you get just back up to here, you get a full do-over. Thank you very much. The criminals that are actually captured by their fraudulent practices are having to do certain things. And I can tell you, it's proven very beneficial. Just from last night, that's 216 grand. That is 30. That is, I mean, these amounts, they're not realized. They mean nothing. I've got some stops that are no longer here. I don't even have stops here anymore. We've dropped time frame. We've found patterns on lower time frames. I've already trailed my risk up to the very lowest points over here, to others over here, to others over here. These latest entries have quite aggressive stops on them because I went big, 50, go and prove if I'm right, trade on up. If I'm wrong, I'm out quickly and I eat my loss and I wipe my mouth and I say, okay, a bit too greedy maybe. Why did we do that? Let's go and have a look. Let's go and have a look. What's going on the 4-hour time frame? I'm going through typical time frames that we tend to utilize. So let's show you this. Let's clean our face and you'll get an idea of why it was interesting to us. Note how this is very low vol right now. Little bit of a shooting star, a little bit of a hammer. We refer to that as kettle drumsticks. You'll learn about this. An interesting point, by the way. Not all shooting stars are shooting stars. At localized highs, in the context of that, they are. And a hammer at the bottom down here, that would certainly be a hammer because it was a localized low and you rallied off it. But often you can get range defining. You see that? Range defining. That's kind of a shooting star followed by a hammer. That is not actually a shooting star or a hammer, even though the candles are in the shape of both of those. The context actually says range definition. Range definition. How far before you fight back? That far. How far to the downside before you fight back? That far. Look at these bodies. Super low vol. We are volatility students. We are students of volatility. So you can see from this that overall you're working your way back up, and it'll staircase. I don't expect it to absolutely sprint back. I think there's a bit of PTSD. I think there will have been retail traders that got milked and destroyed by this. Let's have a look at silver on the same time frame. And let's show you some of the TA that goes with that. So this is what I was illustrating to the guys earlier inside our community. Let's go 30 minutes and maybe even 15. Let's crunch some of the detail up. This is what's going on. Neckline, roughly here. $85. This would be our armpit 1, and that's our armpit 2. Those are the points of interactions with the neckline. This is a complex left shoulder and is actually an inverted HVF. We'll draw that for you too. And then this is your big head. You'll note that it's spiky left glute, high volatility, more rounded price behavior as the market is calming. A calming market tends to go up. A volatile market is usually referenced in downsides. And then there is armpit 2 and the smaller, less volatile right shoulder that broke there. What typically happens when you break an $85 or any neckline is that you get a breakout, pop, 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 and a return move, The only difference is you support here, and that's exactly what's happening. You support and you drop volatility. Again, the man with the eyes for volatility, it's in the name. Volatility funneling. Think of your protein shake. You have the big, broad end, and then you have the tapering into something small enough that it fits into the neck of a bottle. That's how it works. So we're seeing lower volatility sitting on support, an $85 neckline for silver. Isn't that amazing? Isn't it amazing? And all these entries from here, we waited for gold. We went heavier on gold first. Gold tends to leave, but silver tends to overperform. So let me say that again. Gold tends to lead, silver tends to overperform. So after an event such as this, gold on this time frame is actually slightly better. It's pushed up a little steeper. Let's show you it again. When you back-to-back him, you'll see it. Let's do it. You'll see it. More steady, lower vol. 3 rising. So many might say, and some that have some technical knowledge might say, but rising wedge. There's a beautiful basing hammer, by the way, in the end. That's probably your low point in our opinion. You actually have one impulse, and then you are drifting. Second impulse, and then you are drifting. And then you go right up into your third. And then rather than a down leg, you go low vol and sideways, all on a neckline of an inverted head and shoulder. There's your splitter ascending, and everyone goes, but rising wedges only break down. No, they don't. Type 3 and type 2s. You will learn about type 3s. Low vol, sitting on a neckline. This gets news, and it goes up generally more often than people expect. More often than people expect. Listen to what I'm saying to you. Okay, so you will see this in due course, in our opinion. Now, I want to go back to the silver. I'm jumping around on this time frame. I want to show you the drawing tool that after a year with us and having done your theory and your little quizzes at the end, monkey puzzle stuff, it's easy, it's fun, and it's humorous, hopefully, in certain events anyway, depending on your state of humor, what you're learning so that you can check that you're actually moving forward with our lexicon of terms. So I want to talk more about this structure. This was a failed downside. Remember, all patterns aren't meant to win. They're meant to give you feedback. But you get a reversal, then you get a lot of HVS, 1, 2, 3, 4, all the way down, and then you get one that fails, and then you get potentially a reversal in the opposite direction. So if I take this, and I'm going to get rid of all my entries, they're a bit clustering, so we'll go and choose another broker. Pity, that broker does not have the same, neither does that one. We'll stay with the one we have. How about we go right back home? Okay, higher wick there. These two were very close. And some of them, it's quite interesting that you get different data subject to experience of individual brokers and their liquidity providers. There isn't an absolute value when you are trading. These are derivatives, guys. You aren't buying actual silver. You do need to understand that. So I'm going to put that on. And you won't notice because there's too many lines, which was why I was looking for another broker. So I'm going to make this, I did this morning with the team, our family of friends, of fledgling multi-millionaires, those that aren't already. We want to, and be careful, it's not just about making money, good people, it's about what you keep as well. And the reset side is being underestimated and undervalued by many people. And the freedom against the forthcoming over draconian, you know who's, Pharisees of usury extraction, and their desire to spoil the game for you. So I want to show you a couple of interesting things that we showed the community this morning. First of all, that was your stop loss. That was your entry short. You're just in time. You ran your first interim there. You rallied back to the funnel. You came this far and then you reversed. This was a failing pattern. You timed out. You would have stopped there before the loss. But then eventually you came back down and then you stopped out over there if you didn't close on the time stop. Isn't it interesting? As I mentioned, the $85 neckline runs there that we chose for the inverted head and shoulders. This is where I say your patterns work in favor and reaffirm each other. There was armpit 2, do you remember? Greek 2. There was 1 over here at 85. Isn't that interesting that that also turned out to be the stop loss for the inverted HVF that failed? So the final wind up that gave you this as the low for gold so far has done the following. And that's, I find that fascinating. Silver's been a little bit of a flat and slow recovery, but anyone who wanted to sell is out. There's actually not many sellers out there anymore. And the guys that got paper short have tried to cover because they don't want to be caught out again. So you have this quiet, lower volatility money market that has quite an upside drift to it. Even when it's at the relative low 1, first impulse, relative low 1, there's an upward drift. Second impulse, upward drift. Third impulse, very slow, very low vol. And now the down leg should be coming, and instead it's a tiny little falling wedge with a pop, all on the neckline. Beautiful stuff. It's beautiful stuff. And note, we talk about our funnels being resistance. To break our funnel is hard. So you first look at this resistance, 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 resistance. Then you go up, and then it comes back, support, support. You go up, you break it, just technically just run resistance, resistance, back down. Then you come, resistance, 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 pop. Now it's support, 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 support. You have a massive support line right behind you of a thick funnel, of a draw that in the end never made target, which makes it more bullish generally. So that's where you are with silver. That is where you are with silver. It's a discount window. Doesn't mean it starts ripping like it was finishing just before the volatility. No, this is going to be steady, steps up, steps down, tentative, but all the hot leverage got cleared out. All the hot leverage got cleared out. Thankfully, we stood out. When the cops came to the party, we'd already danced up a storm, taken all the hot girls home, and the cops arrived and arrested all the mugs that arrived and were still getting drunk and hammered and were still going to drive their cars home in an absolute state. That's how we did. And now we show up and we're ready to party again, and everyone else is still hungover in PTSD. That's the way of sniperdom. It's be there for the key events, achieve what you need to achieve, and get out. Get out. Don't be permanently on risk the minute things change. So that's silver. That's why we feel that you're going to overall broadly start a move back to the upside. You often get nestled head and shoulders. So by the way, head and shoulders give targets. I'm going to say goodbye to that. Draw. And we can go to a different broker now and say the following. Where would the target be? Well, let's have a look. Let's have a look. Let's have a look for you and draw the next target level. By the way, you can see that blue line. I'm sure you know what that is. That is, of course, there's your 85. We do necklines in light blue and solid. There you go. That would be your neckline. And what would you do? You'd do a projection. You'd make sure, go away. There we go. You'd do this from the low up to that'll be your target once you get going with a bit of speed. By the way, this part from here to here was covered with momentum. So you can understand, again, continuation patterns when you're in the downside. There's many of them on that period during the way down. It sure as hell happened. Again, there's your reversal, shoulder and shoulder. Final neckline, complex head with a W, and there's your other armpit, 1 and 2. So you are in a winding up, calm state for which you've just broken up out of a falling wedge, and you are chill, but getting ready to move further forward. On balance of probabilities, how do we be wrong? The point which we're wrong is the right shoulder, and it can absolutely happen, and we will take losses. It's as simple as that. So you must know the size of your losses. For that, you need a real money management, and you need to have a broker that shows you those losses. It's even better when it shows you on Tradingview. I can see and manage all that. The sum of all those losses or how much I'm in for. So overall, we think we're going to pop out the top of this and make our way up to 98, which probably means a technical run back above 100. A technical run back above 100, and then you could be in line for a further head and shoulder maybe. If you run that 100, do 104, do a shoulder. This will all be a new head, one big head, and you could continue to work your way back up on what we refer to as nestled heads and shoulders. Okay, that's quite a lot that I've given you to absorb on gold and silver. The other point I want to make that I was also making to our premium guys earlier, and the key thing is when you get the news, is you'd made 50 on the downside of, let's go back up, you always start on the macro, you'd made 50 on the downside of the gold-silver ratio. You'd smashed a key level there that we put in there in the dash blue line. You came all the way back up, and now you're going to dribble your way back down. It may take longer for us to get up that head of steam where it gets to that point just before the last rejection. Remember, we started slow. You got spoiled near the end. It was too good. It was coming too fast. You got a tiny bit spoiled. You may need the gold-silver ratio a couple of times to come down here before you let go and we start making new numbers. That could happen, for example. It's a key level. You're up at 107 over here, and you've been as high as nearly 100 through 128. So this isn't going to happen just because you want it to happen in a hurry. Again, it takes a while to build up that level of momentum. It has to become obvious again. There's a lot of people that think that's it, that's the top. A lot of people think you're not going to see a new high until 2030 on silver and all sorts of things. Good old Peter Brunt and anybody else. Lots of other people with their views. And it's okay to have views. It's not right or wrong. And for all we know, we'll be proven wrong. But on balance of probabilities, this candle will come back down at least one more time. It might bounce around before it's allowed to go down to 32. and eventually single digits. But single digits is where we will get out. Okay, let's have a look at the live stream comments. I will stop and then I'll try remember. Let's see. Can he do it? He's totally autistic. I do own maybe. So here's an idea of what this all means. 1,700 of you watching. Glad to be with you. 448 have hit the like. That means most of you think it's pants, which is deeply upsetting. And I think I'll have a little cry. But if you do get value out of these, we'll do them more often if you fool the algorithm for us. So we appreciate that. Don't forget the links to book. So, quick exec summary. Judicious, slow progress, low volatility, base building potential in gold and silver. Okay? And platinum. We didn't look at it, but it's very similar. Miners will start to tickle up again slowly as well. And this is a great opportunity to go in and secure more calls on my favorite miners. I'm really grateful for that because I've released profits and cash and put it in. Let's go again. Let's go stocking up. The base is getting, these opportunities when you get out at the right time are great. It's when you wear them on the downside all the way back down that you're battered and broken and you've fallen down the cliff and everybody else is just showing up fresh. You don't want to be caught there. People, just not taking that crash is worth the entry ticket for our community membership. Just not taking that crash in any form, not even stop losses being run. It's like, I'm good, I'm out. Close it all. This is where we're going to do it. Technically, it showed us that was why. I went into quite a bit of detail. We did, I think, an hour-plus webinar on it on a Thursday night before, when I should have been packing my motorcycle with gear, because it matters. It matters that the guys hear exactly what I'm doing, why I'm saying it, why I'm doing it. And it came with a prior warning that I was leaning in that direction. So it wasn't like a thumb suck. It's very important not to wear the downside. And I have a primary bull bias. I don't short, but it would have been very profitable. But I'm no interest. I was away. I had a great time, and Bitcoin and Ethereum greatly obliged me. And I'd like the same for you. So book a call if you'd like to find out more. Be courteous and polite, because we also eliminate the wrong kind of profiles. We don't have to have anybody. Truly, believe me, I don't need anybody's money. It's only if you are of the right positive contributory mind, self-actualized in some ways already in life, and ready to maximize your wealth. It's not for everybody. Some people have got the poor virus and they have to live it out. They want to live it out. That's their script. They've decided they can't unlock from it. Go ahead. Don't come and stress. If you have any doubts about us, this channel's been around since 2009. Okay, so the exec summary, let's just re-go. Low vol, bottom picking, doesn't mean it's going to start ripping like a maniac, how it ended before the crash. It means it's going to work its way up slowly with ups and downs, probably giving you small little setups all the way that can be exploited, which as a community we'll be pointing out, and taking cheeky big size with very tight stops on those little, if they work, they don't. If they don't, we take a small loss, even though it's big size, because they'll be tight. And if they work, we've broken additional position size into the trade to take us even further up the ladder. I'll also be looking, as I was mentioning, and that's where I got sidebarred, additional calls on our favorite equities, which include Heckler. I'll run past Heckler with you, AG and one or two others, super quick. And what else? And I'll also be taking out because of the counterparty risk. So there's the reset brain, the market sniper branding, 3 circles. 3 circles. I haven't got 3 hands, unfortunately. And those are the reset, which means banks, liquidity providers are part of the problem and can suddenly kill, take, zeroize whole system of a down type situation. And they feel nothing for you. Ask me. I still haven't got my FTX money back. And that's, that's not a bank. That's small fry stuff. So must take out. Turn it into physical assets. I am generally physical assets, precious metals, but it's also good to buy productive land, other things, title deed, paper must be held. In our community, we are going to be finalizing a broker that'll have us get script for our platinum miners that we'll be buying here. So I've sourced a broker. I will be providing and proving it first myself, and then we'll affiliate it to community members that will see you get share certificates. I've had nothing but problems trying to get share certificates out of Schwab, Interactive Brokers, any of these guys. That means you'll own a platinum miner and you will have your name or your foundation or your trust structure on that and be a claimant on it. And it's going to be second half one of the most dominant metals, in my opinion, as I've said, in this bull run. And it's kept time with silver for last year. It's lagging a bit so far, but it's typical of it. It's sort of lag and mega catch up, lag, boring, mega catch up. So it staircases even more than the others. But it is very valuable, very unique. So we'll be acquiring and accumulating on an ongoing basis with script, probably on a quarterly basis. Once you buy shares, and then every quarter. So we've got a plan. We're going to keep doing this, and that is in a country that produces 80% of the world's platinum, and then Russia's at 11%. So that's going to be very, very valuable. Well, you have to hope you're going to sell quickly, but the banks will go first. Your money will be locked in to get out. Paper is absolutely essential if you have it. There will be multiple claims, and it's only what you can prove, as we've seen before. So some stock, let's look at some miners for you as well and take a look. Did I drop? I didn't finish dropping down on the gold-silver ratio. We'll just have a look at that. So you got that spike at the 50 level. We highlighted, by the way, for those that are first-time viewers, we highlighted this. You had a structure here. Let's do nice straight lines, not the garbagey ones. We highlighted that, and that gave you the 50 low. And then you had pushback, pushback, pushback. Then you had the final silver surge. Then you got a very beautiful structure here. Now, that was a warning. The upside strength of this momentum, up, down, and then a little bit of thinking, slow, vol, and then surge. That was your surge. That was your surge. And that was part and parcel when it was a confirmatory fact, having just run. And this wind-up was happening at 46 levels, 46 to 46.5 levels, having run the key level of 50. Probably after 100, the most significant level that you can get. I want to make this half-dead fly famous, because this is what happens when you piss me off. I make sure I get you, and then I kill you. And now, who's right now? I told you to stop, and what did you do? You didn't believe that I would get you. Oh, I must share my screen. Sorry, guys. I was showing you flies instead of sharing screen. Trying to be too clever, as usual. Let's go back to share screen and finish that XAG one more time. There we go, finally. So this is what, I'll just recap that super quick. That one was the squeeze. That gave you the setup down to 50. It is impossible for me not to have a live stream without forgetting share screen. It is so tricky. Should have had a device. And then you bounced. You rallied off the 50, but you had a final exhaustive fall. And then here was the wind up. I've kind of scribbled all over it because I'm doing it a second time. Have a look at it again. Strong up, second strong up, low vol, walking its way and getting ready to go. There was that squeeze. And that was your pain. And by the way, shooting star here. Lots of long wicks, lots of long wicks. What's bearish for the gold-silver ratio, friends, is good for you. This is rounded dome and back down for me. It's rounded dome. I'm not saying in one go you're just going to run it, though. I think you could do this, and you might still respect the 50 level a little longer. So that's why it's not all, hey, moon, just nothing but surge fundamentals. You're broadly going to make your way up steadily, with some setbacks, small winding up structures, a smart deft hand in calm markets. After reversal, it starts calm. When it starts to get too fast and furious, you need to start thinking that the party, it's time to leave the party with all the hot girls before the cops arrive and everyone gets arrested for possession of things they shouldn't have. Okay, so there you go. That's what we think is coming on down. Let's have a look at some of those miners. At least we're sharing screen this time, so we can have a look at Heckler, which is one of the ones we pushed as ones that I really like. This is so low compared to the miner, and they're relatively undervalued. That is begging for some call purchase. Don't forget, it's gone to 34 recently, and that got itself, what's that? That's about a third off. You'd need $13. It's actually more than a third off. You have to have a look at that. Let's have a look. Let's measure it down to its low. It was 38%. That's even worse than the silver itself. And at 38%, 0.66. Wow. I mean, and it's barely up off that. This is so, again, the miners I think will lag, but then they'll play whale catch up when you get to the latter stage of another surge again, and then you'll potentially be sitting with overperformance. So let's just make sure we're sharing screen and I'm not covering the chart too much with my head. There we go. Big gap on the events as well. Of course, they don't trade, they just open down. That's why you get gaps. Tough to have stops in a market that is that volatile where there's gaps. You could get badly rinsed on that. So that's why I prefer options. I've gone long-term options to 2018. That's pretty back to the future. 28 long-term, yeah. So we'll have all of this year, we'll have all of 17, and then, you know, come December, and you start thinking about the time value on that and closing them out. Good. So first, Majestic would have probably done something very similar. I think they're going to look very looky-likey because this is a silver story or a dollar story, and we should go past the dollar. First, Majestic had a sell-off, but it doesn't look quite as extreme as 28. So Heckler was pretty hard hit by that, 28.77 on first Maj, but they might not have done as much on the upside. I think we should talk about the dollar, so that Dixie. So you immediately get a return move reaction from that spill break. I want to show you that from the high end time frame. Remember this. We do need to go log scale for that. So this is a big time frame. This was a triggering event that broke down when others said it will be going up. And they also said the USD Swiss franc would be going up. No, that's a break of the trend. That's a break of the trend for us. And you're balked at the 100. And the great irony was seeing everyone, Brent Johnson framing it as such a big success that gold's made 5,000 and that the Dixie was still in the 90s, mid-90s. I'm like, no, you're cross-comparing with other crap currencies. Everyone, it should be at the 70s or 80s. No, they're all garbage. You're still down, and you're still you're still the ugliest of the bunch, but they're also ugly. And they're also dumping euros for gold. Ask the Europeans if they're buying gold. They're dumping euros for it. You've just got more treasuries out there that need to get dumped and more dollars out there that need to get dumped. That's all. That's why you're underperforming, but you're underperforming in a class of underperforming. That's why you consider your underperformance as almost an overperformance. What are you talking about? That's like bragging about failing mathematics with a 27% because you're only 5% behind someone else who was smarter than you, who also only got 33% or 32%. I mean, come on, it's bizarre. It's bizarre. That's a break of trend, friends. And after a move of that volatility, that's weekly and monthly, you got a little bit of pushback because they don't want a disorderly story. And exactly what we tweeted, this could get disorderly, expect something. Every time we have an expectation of something getting deeply disorderly, this was the trend break one, you get a reaction. Look at this reaction. You got it here, you got a little hammer. There you had an even bigger hammer. Here's your biggest hammer, but it keeps going lower and it's doing gaps. So you've had a little reaction. You might go all the way back here and the reaction come. But the overall trend move for us has always been, we suspect continuation. We expect continuation. What is that? A broadening structure. What is it on? A bear pole, an inverted pole and megaphone that is of ascending nature, parallel to the basing ascending grind line channel of 18 years long that you were just holding, then just testing the level for. You now gave up. You've done it. You broke it with a gap. Doesn't matter that you're putting in your return move and having a wee rally. You triggered. Once you've triggered, you triggered. That round is shot. Maybe the fuse is taking a little bit long to ignite, but you get a return move and then you trade down. Same with Bitcoin. Same with Bitcoin. We need to do this with Bitcoin because you had the exact same thing. You triggered on Bitcoin to the downside, but you didn't follow through. And then this dollar event occurred and there's your follow through. Have a look at it with me. Hey guys, be careful. You're in a bear flag. No, you're a boomer. No, I'm not a boomer. I'm Generation X, my friend. Big difference. You know, you broke. You had a return move. I even got short and got back out again and then entered short again. I don't carry losses for long. That's what keeps me alive. I don't tolerate losses. So I wore some red on that and now I'm laughing. Now there's a bit of a hammer. Okay, there's a slowdown, but you have bear flag targets. You could do a rally. You can do a rising wedge. You can do a lot of things. But the overall is there are downside targets. Downside targets for Bitcoin, downside targets from Bitcoin. And then you look at the revelations. Good old Epstein. Your freedom token, man, has the shine ever come off the Liberty speak of these guys, BlackRock, pump my bags. Oh my goodness. The digital proxy designed to be an on-ramp into digital money. Let's create pumpamentals so they all get greedy and they stop caring about the liberty. We'll buy them off with, hey, you got rich, money, oh, money go up, and everyone will get in. We'll give them leverage so they give it all back to us. Oh my goodness, so easy just to shear the sheep. My goodness, what a bunch of clownery. And they're all buying it. They're all buying it. No. This is, this is still freedom coin. This is still freedom coin. Downside bear targets, bear flag targets. You triggered here. You first wound back, return move after triggering, and then you went down. Now you get a rally because you broke the 80 grand level. You might rally all the way back. We've had key levels here before. You might come all the way back there. I'm not scared now. I'm deep in the money. I'm patient. This thing will unroll, and then we'll have MSTR. How many chairs you're sitting on? How many chairs are you sitting? How many microphones are you using? How many chairs are you sitting on? Oh boy, what a clown. What a bunch of clownery. So let's just have a look at MicroStrategy. You see those, my friends, those are rejection candles that ended up at the low, that attempted to trade up, ended up in the low. That is an inverted hammer. It rallied all the way up there and came most of the way down. And today you're gapping below. You're almost certainly a breakout to the downside. This, we've got puts on that. I'm quite happy with them. I'm quite happy to wait. It's like my short on Bitcoin. Long gold, short Bitcoin. Long real money, short the CIA, NSA, Mossad, dark state, captured complex of derivative proxies inserted in between you and the physical money you hold. Hear that again through your head. Play it over and over again. Real chance, real opportunity to increase your investment into the precious metal space. And with that, I think I'm going to love you and leave you. There's much more that we'll have to say in the future. We'll have maybe higher energy, more detail on various other things, but we're back and we're here to tell you you're getting a cheap entry providing you're patient. Don't expect surgimentals everywhere. There will be pullbacks. There will be continuation patterns along the way as well. You too can join us on maximizing that by hitting that link right there in the notes below to book a call. And you can become part of a winning community, taking their accounts to all-time highs. Unbelievable experience. I've never made so much money in my life. Our community members are doing incredibly well. That's what's important, not what I do. It's not for ego. In fact, I'd rather be anonymous and considered inconsequential. I want to be a flip-flops and short guy in a warm climate who just, isn't hassled by most things in the world. And I want that for you too, the freedom that gives. And that's going to be how you play the key part of this entire cycle. For all you know, your entire life of preparation and wisdom and experience was to prepare you to do this execution of this stage of your life right. You might be 40, you might be 30, you might be 25, you might be 65. This is economic history in the making. We have the correct framing. Rates are going up. Go and see that Aussie. Let's just show you that as a parting shot. The rates will continue to go up. Powell was supposed to cut. What was happening? What did he do? Can't cut. Can't cut. Oh, new Fed chair and all of that. Well, we'll see. We'll see. Look at that continuation pattern there on the, it's beautiful upside HVF. That's the Aussie. And if you think it's only Australians that are going to be affected by this, I've got bad news for you. But the debt across the board is going up. We can do the Japanese for you as well. Let's do the Japanese. How's the JP 10-year? I don't even know. I haven't seen it in a while. Oh, Japanese. This, we were calling draws. No one wanted to hear about it. Nobody wanted to hear about it. We have to delog it. There's our funnel draw. You're at 0.05. Today, you're at 2.256. The amount that has gone up is unheraldedly high. Unheraldedly high. You had a squeezing higher rising wedge just to make your target there when you made target. And what happened out of that? You type 3'd out of it. That's right, melt up. That's how bad it is, my friends. Nobody wants your debt. Alert, alert. Nobody wants to buy your debt. You're bankrupt, you asshole. I don't want to own it. Try sell it to someone else. I want gold. Yeah, that's the message. Foghorn it. Put it in the foghorn. Let's check up on America. Let's check up on America. Let's go, let's go. Oh dear, it's also creeping higher. Now it's not Japan. But it's also creeping higher. We've been saying this will come, this will come. It's coming off. You had that little reversal in there. We've shown you that one. I should maybe drop the time frame a tiny bit, make it a bit bigger, because otherwise it looks like microscoping. This is trading up. How much has it traded? 4 green candles in a row. 4 green candles in a row. I don't know if this will turn out a particular impulse or just that. But this, so it could already be ready to go, and that'll be your break. Or this is all a second, one big second and a big first, and you still got to make a third. But this goes higher generally, and then you will shoot. When that gets ready to shoot, friends, it will be over. Okay, love you and leave you. Thank you for watching the live stream. Thank you for coming on. There was 1750. That's a nice chunk. Please share the video. We need to help as many people preserve their wealth. We really do. We really do. I will do updates and catch more of your minor requests on future streams. I want to keep this one not too long, and we'll catch up with you later. Some of the best quality amongst you who want to maximize your wealth, joining us by clicking the link. The rest of you, learn, self-actualize, add value to other people's lives. You will end up being rewarded for it by natural form of course. Give out positive energy, help people move forward. You'll learn to monetize, you'll develop, stack in precious metals, do that, build something for yourself, and you'll be eventually leaving family degrees of wealth for your children and your peers, and protect it. Get also plans outside of the West. We help with all of that. Till next time, catch you later. Thanks for watching, and we'll see you again soon.